Hey everyone, Raul Shah, Doc Shah Financial, and today I want to talk about Warren Buffett's famous quote, "Be greedy when others are fearful and be fearful when others are greedy," and what that really means in terms of practicality and, how can you actually apply that to your investing career. Human psychology is a really funny thing. When stocks go up, everybody celebrates and we feel great, and then when stocks fall, desperation sets in and we feel terrible, and then we panic sell. Stocks falling, generally speaking, become safer investments, and stocks rising, generally speaking, become riskier investments. Now, of course, it depends on what's driving the price down and driving the price up. But assuming all is unchanged and a stock price falls, it's actually safer because you're getting more value when you buy it at a cheaper price relative to what it's worth. And the same can be said in reverse, that if nothing has changed in the expectations for earnings, but the stock price is just going up higher and higher, well, now it becomes risky because those earnings are going to have to really increase to justify that high stock price. So it's counterintuitive. When you see a price fall, it really is becoming safer. And to understand this, think of this quote whenever you see a stock price falling. It's not a stock market. It's a market of stocks. And that's really going to help change your perspective, because now you're going to understand that, hey, it's a market of stocks. And just like in any other market, when something goes on sale, it should catch my attention and pique my interest and actually make me want to buy that stock or that item. Obviously doing research behind it, but you get the idea of the mentality behind that. When stocks go on sale, you should be excited because now you can go bargain hunting and you can pick up really great companies at dirt cheap prices, and that's how you make a killing. And, to really succeed in investing, you have to sort of be a contrarian, but you can't just blindly be a contrarian. You can't just take the opposite viewpoint no matter what. You have to be a calculated contrarian. And it's difficult as a human being to actually go in and buy a stock when the price is falling, because there's panic setting in, right? There's all kinds of news like, hey, this company is going out of business, or this other competitor is taking all their market share. And a lot of times human beings, investors, the retail investors, public, even institutional investors, they just sort of buy into that fear. And this drives stock prices to extreme lows, and then the reverse is true also. When euphoria sets in, it drives those same stock prices to extreme highs. And the extremes are where stocks really tend to either get very dangerous or very safe. The example that I always use is looking at a stock, what it's worth and what it's trading at. The stock's intrinsic value is 50, and euphoria bids the stock to 2,000, right? I'm using a very extreme example. Well, that's an incredibly risky investment if you were to buy at 2,000 when something is worth 50, and you'll lose that bet 99.9% of the time. But if you were to take that same stock that's worth 50 and buy it at $1, again, extreme examples to make my point, that's a pretty safe investment. All the bad news is priced in at that point. It really takes one good report to send that stock soaring up to its fair value. So you really want to focus on what the company is worth. You don't want to get distracted by the news. I always tell people that stocks were quoted once a month, everyone would instantly be a better investor, because you wouldn't be subjected to the emotion of a quote. Because what is a quote really? It's just what the last person is willing to pay for it. It doesn't tell you the intelligence of that last person. It doesn't tell you the discipline or the patience, or what that last person's goal is. Maybe they were a trader that wants to get out, or they're a speculator that wants to get in and early, or bid a price up. You don't know the intent behind that quote. And so you shouldn't focus on it, because all a quote really tells you is if the last person was a fool or not, in my opinion. And when I look at a quote and it's offensive, when it's a really low price for a stock that's worth a lot more, I'm gobbling up shares. I've done this with so many stocks over the years where the stock price is clearly mispriced, is trading at way below what it's worth. And I'll go in and I'll buy huge amounts of these shares because I know what I'm getting into. I've done the research in the company. I know what it's worth. I don't care what somebody else bid for that stock. I know what the stock's worth, and I know what I'm willing to pay for it, and what price range makes sense. The same can be true again in reverse. If there's a stock that's trading significantly higher, I don't want to touch that stock because it just doesn't make sense. I would be the fool in that case if I paid that really high price for a stock that's not worth that. So don't get caught up in quotes. Don't get caught up in sensational news stories. Don't get caught up in emotions. You really need to be logical when it comes to investing, and you need to be able to separate your emotions from your decision making if you really want to be a good investor. You have to look at a company as an individual company, not in terms of macro events, unless it's specific to that company. But in generally speaking, you want to look at a company as an individual entity. And you want to make sure that you're getting that stock for a really good price. And it doesn't matter what other people are willing to pay for it. 1,000 people yelling out one quote doesn't make that quote right. It's not how many people think that a particular stock is worth it. It's what the stock is really worth. And over time, if you're right, then that stock is going to trade at that price, regardless of what people are willing to bid for it now. So again, understand human psychology. People pile in when things go well, and people just want to get out when things go bad. And those are opportunities. People are piling out and the stock price is collapsing to an offensive low. That is an opportunity that you're not going to get very often. And as long as you understand the business, you've done the research, you've calculated what the stock is worth, take advantage of that opportunity. And if you need help with that, I manage and create stock portfolios for clients all the time. I was a very successful private investor. I shouldn't say was, I am a very successful private investor. And the same philosophical basis, value investing, discipline, patience, the tenets of investing that I believe in, I apply the same to my clients. So go ahead and shoot me an email, Raul@docshaffinancial.com. And thank you so much for watching this video, and I'll see you guys in the next one.